A bit of a hot water today for global markets, oil, trading water. Gold is just trying to make a bit of a turn back into positive territory. How will all of this affect the biggest market in the world, the U.S. stock market? So the stocks index futures are pointing to a lower open today as traders awaited fresh economic data and eyed probable March rate hike from the FOMC. That's the Federal Open Market Committee. That's what FOMC stands for. Today, Tuesday, Wednesday, and Thursday will be the most heavy when it comes to the data. Take a look. Tuesday, we'll see National Federation of Independent Business survey results for February, 6 o'clock Eastern. We'll produce a price index, what they call the PPI data for the previous month, and that will be 8:30 this morning, despite the terrible weather, snow being expected. Flights being cancelled into Washington and New York. The Federal Open Market Committee started its two-day meeting today. The market is anticipating about 93% certainty that the Fed will raise interest rates just for the first time in 10 years. On the earnings front, Volkswagen says 2017 numbers will be better than 2016 after the messy what you call diesel deception. Then you have the HD Supply Holdings and DSW reporting before the bell. If you're watching the Asian markets, of course, it's a bit of a sympathy with the rest of the world. Wavering today ahead of the FOMC two-day monetary policy meeting. All fingers crossed, all bullets saved until tomorrow afternoon when Janet Yellen will report. And, of course, the political uncertainty in Europe weighing on sentiments from Netherlands to Turkey and the UK. In Japan, the Nikkei 225 finished down 0.1%. The Australian benchmark ASX 200, that's up about 0.03%. South Korea's Kospi, 0.75%, are in the green, even as the country remains engulfed in political uncertainty after the impeachment of President Park last Friday. On the mainland, the Shanghai Composite was about 0.5%. In Hong Kong, the Hang Seng was down about 0.15%. Let's come back home to Nigeria, where the debt office yesterday started a 5-day subscription putting that to the public, or auction as it were, of new FGN savings bond, 13.01%. That bond is being listed on the Nigerian Stock Exchange. This is one of the new products that the debt office says is being used to raise money on behalf of the government. Let's bring this conversation to the doorstep of the executive director in charge of markets at the Nigerian Stock Exchange, Jalo Haruna Waziri. Good afternoon. Thanks for joining us on the program, sir. We appreciate your time.
Thank you for that.
This is very interesting and very significant for the Nigerian Stock Exchange, isn't it? Getting a savings bond, which is a new product, as it were, and kind of a new investment product listed on your market.
Actually, the reverse is the case, because I think this is very important for the population, because ideally this product is actually targeted towards a small saver who wants to participate in government instruments that actually achieve a higher yield than they would elsewhere. And so for us, it's more targeted towards the people rather than the exchange. But yes, it's also good for the exchange.
Yes, it's good for the stock exchange. What's been the talk and the buzz from the stockbrokers community? Who are part of this? Who are the primary dispenser, as it were, of this bond? What's the appetite like? What are you hearing?
Well, to give you an example, when we were actually introducing this product with the DMO and we invited the stockbrokers, I think I haven't seen our hall so full of brokers trying to understand a new product and trying to participate in it. So within the market, there's a significant zeal, there's significant intent to actually distribute this product, because for them, they've been shut out of the wholesale market for a very long time. And I think this is an opportunity for them to create some market within the retail space and ensure that at least this product reaches the right people at the right time.
Does this fit into the overall outlook of the market in terms of a roadmap for the stock exchange, not just on the equity side of things, but for the debt side of the marketplace?
Certainly, this is actually an opportunity for also the stock exchange to actually reach out to this distribution network from a retail perspective and ensure that we bring some kind of financial inclusion to the man on the street to ensure that at least he has an opportunity to benefit from what we have as a market today. So yes, you're correct.
Well, as soon as this primary auction is over, it will be all over to your market, the trading floor where you are, just a few floors down where you're sitting in your office, to get the secondary part of this up and running. Talk to us about how you prepared for this coming through in the next couple of days, technically Monday next week.
So the thing is that the offer opens between Monday and Friday from an offer for subscription perspective. And there are distribution agents that actually collect these forms and subscriptions and remit to the government stockbroker, in this case, which is Stanbic IBTC stockbrokers. Now, after that, between Monday, Tuesday, and Wednesday, there will be collation and also allotment of those that have actually subscribed. So technically, trading is not likely to start until after Wednesday, when the allotment is done. And on Thursday, every investor who actually subscribed to it would get an alert from the CSCS indicating his allotment. Thereafter, then whoever wants to sell the instrument can now approach a broker in the market and say, hey, I want to sell my position, I want to sell down my position. Then they can come to the stock exchange, and then the broker will trade on their behalf depending on market conditions.
Okay, that's quite very explanatory how things will move on from here. And you think this will boost markets in any way in terms of the daily activity on the NSE?
Well, certainly we are hopeful around that because we've seen interest both from an investor perspective and from the community in terms of dealer members or member dealers. So the thing is, this is just a start. This particular instrument is going to be issued on a monthly basis. So anybody that's taking it down is likely to wait the first quarter and see that the coupon payment is made, because this particular instrument is slightly different from the normal federal government bonds. Coupon payments are done on a quarterly basis rather than on a half-year basis, which is what exists. So the idea is to bring liquidity to individuals from an investment perspective, from a return perspective, and also when there's need to actually create some liquidity from a selling perspective, the market platform should actually provide that for clients.
Well, you folks look like the one who's really busy at this point in time. Thank you very much. Haruna Jallo Waziri, who is the Executive Director in charge of markets at the Nigerian Stock Exchange. Thank you for your time and winning on that very important conversation